Hello, my Centurions. This is General Romulus, changing things up just a little bit for our Tuesday instead of a short written summary. There are a few things that I believe simply go better with pictures. So, short video, and for those of you who get bored with the details, this may not be for you, but for the others who geek out on this stuff like me, hey, then tune in and stay tuned because we've got something for you today. All right, there's a lot of talk right now about the dollar strengthening against currencies around the world, primarily the euro. That's the largest representative currency against the dollar basket out there. So we can look specifically into the euro, type that in, hit Forex. Nope, that's not it. Hold on, we'll try that again. EURO, and then US dollar. That's the main one. Okay, so a little bit of a bounce in here today, but that's not what is the main consideration of our conversation. Headline news on CNBC this morning that the euro trading at a 20-year low, and followed by this comment, many experts believe that it's going to be going much, much lower. When CNBC gets that confident to come out and say something that bold, that typically is an area where there will be at least a short-term counter trend move starting in the next couple of days. In this case, it started right away today. Okay, but let's take a closer look at what's been happening inside of here. First of all, we're going to start with the highest time frame that we can, the monthly, and we're going to work our way back down. Okay, so we use DXY as the main trading symbol here. And I'm on a monthly chart. So we go back quite a while, as you can see. Okay, this goes back all the way to 2010. So we've got almost 12 years of trading data on this chart. And there is a series, a little bit of higher high, higher low going on in here, which is the definition of an uptrend. Okay, breaking out from this resistance over here at about the 103 area, and that took place definitively a couple of months ago in June, and now it's just kind of tacking on to those gains. Okay, this is the important part that we want to pay attention to. Okay, tacking on to these gains over here. All right, so moving ahead, down in the indicator situation, first, the breakout again, really taking place a couple of months ago in June, and then piling up on the gains. But as it's been going higher, you could see a little bit of fatigue in the shorter term indicators, such as the CRSI2 and the CRSI and the RSI2. They are now both showing negative or bearish divergences into the recent high, as opposed to the April highs, which was also a closing high. All right, closing high again from this pattern, from this breakout. Okay, so that does show a little bit of a slowing of the momentum. MACD is still on a buy, up and away. Okay, so what do we have on a monthly basis? Also very, very overbought, extended on the RSI 14. It has seen a higher overbought level in the past 12 years. Back in 2015 when it reached almost 83. Right now it's trading at about just under 77. So it is very overbought on a longer term basis. In addition, there are some very slight bearish divergences that are starting to show up. So that's the monthly. Let's go to the weekly now. Here we go. Flying through it. We have a lot to cover today. All right, here's the weekly chart. This data goes back to 2019, so a couple of years of information for us. Breaking out again, you see from these highs in July. Okay, that's the highest close last week, and then tacking onto that gain. But you see the bearish divergences are becoming a little more pronounced, a little more obvious. Okay, this is the CRSI, that's there. RSI2, you see it there. And now it's a little more definitive in the RSI 14. So you see here 81 back in May, then it goes higher in July, and it goes to 76.5. Again, higher now, and it's at 70. So again, slowing of the momentum. In addition, the MACD down here is just sitting right about to a point where just a little more downward pressure would create a sell signal on that for the MACD. So monthly, still uptrend, but starting to show a little bit of slowing down in the momentum, which typically can precede ongoing activity to the upside for sure. And the weekly basis, slightly stronger representations of bearish divergences going on, dating all the way back here from early May. Now we go to the daily time frame. Okay, switching again. So DXY. Breakout right here, just yesterday's trading action on a closing high. Okay, and you see on the short-term indicators, they just simply got very, very overbought. And on the RSI 14, negative or bearish divergence dating back over the past 5 weeks. Okay, it hit 75 up on this high. This time, right before as the breakout, just couldn't quite hit 70. So a little bit of a slowing momentum across the board on the dollar breakout. In addition, this trend is not fresh. This is simply a new breakout in a trend that has been in place for some time, a strengthening dollar. Okay, trends get tired after a while and then can show more susceptibility or vulnerability to at least a temporary reversal. The monthly chart suggests that a daily and or weekly reversal should and could once again be met with bullish activity, taking the dollar higher. However, the weeklies and the dailies are starting to show a little bit of exhaustion on this trend that has been going on and in place for quite some time. See, it really dates back, see, all the way down here, okay? All the way down here, which was May of 2021 is when this uptrend really has been in place. So for about 15 months, and again, it's looking a little bit tired based on the evidence that we just uncovered. All right, I'm going to save this one for last. Let's move on to oil. Boy, all these things are related, connected, tied together, aren't they? Yes, they are. Crude oil coming up a little bit in here, balancing, perhaps slowing down the sell-off that really has been in place since the middle of June. Turning around in here, you notice also that was right when the stock market bottomed. It was right here on the 16th, 2 days later after oil peaked out. And right about in here was when the stock market stopped running higher. Anybody see the magical word there? Correlation. That's right. It's one of my favorite words. Hope it's yours too. Okay, oil, again, turning around in here. A little bit of a lower low than over here, but a slight positive divergence, 34 versus, go one more over, 35. Little bit, not much. We've already bought and sold that. So we have oil on a monthly chart. Again, that's where we're starting from, the higher time frames. And it's had a couple of months down. We know that it peaked out first right after the war started in March. And then again over here in June, pulling back over here a little bit, coming off of what was extremely overbought conditions on a short-term basis. On a long-term, the RSI 14, which is a nice intermediate longer-term indicator to get a good roadmap and a sense of balance out there. It simply reached a little overbought status and then reacted to that overbought status by pulling back. Still on a buy signal on the MACD. Okay, volume obviously declining quite a bit in here. You see that. And longer term, that can certainly be a concern. So let's move on to the weekly balance here and see what that reveals, if anything. Neutral territory on short and intermediate term indicators. MACD's on a sell signal still. But as it's been rallying and holding in here, there is some resistance right there. It broke through the 50-week moving average, rallied back to it, and is having some resistance in there. If it does get above there, there is the coming falling 21-week moving average that it will have to contend with. Doesn't mean that it cannot get through it, but it does have a possible resistance area in the not too distant future if it breaks above right here. Okay, so that, looking at the daily, let's move again. Whoops, we repeated the weekly by mistake. Okay, there we are. So now we're on the daily basis here, and also coming into resistance areas right at the 21-day. The 200-day isn't too far above there. Also, the falling 50-day would be not far above that area. So confluence of resistance areas in oil prices, meaning probably not going a whole lot higher into the mid 105, 110 area anytime real soon. On the indicator basis, let's take a look at that. Reaching slightly overbought status in the short-term indicators. See right there, I don't think there's any negative divergences. Let's see, that hit a couple of weeks ago, 94. It's at 94 now, so no negative divergences there. And neutral territory on the RSI 14, and just going into a buy signal, interestingly, on a daily basis on the MACD. Okay, so that is oil. How about the interest rate environment? That's another major important factor. We'll primarily focus on the 10-year, but a quick look at the 2-year before we go into that. Now, very overbought. That got relieved over the last couple of months, and it's just been holding in here. Okay, I've mentioned this many, many times that I'm watching this particular market incredibly closely, and there does seem to be a little bit of an ascending triangle in the possible making over here. Okay, so we have kind of an imperfect uptrend line going on the downside here. Okay, on the underneath, and then an imperfect top. All right, a little bit of an imperfect top. This isn't symmetrical. I don't mean symmetrical triangle. I mean symmetrical in its lack of prettiness. But that does have the possibility of forming into an ascending triangle. A breakout would mean exceeding these highs. A breakout would mean exceeding these high points. Okay, so let's move on to the 10-year though, because that's the main one to focus on when it comes to interest rates. A little bit of a pullback today, starting with the monthly. We'll start at the top, and we'll come back to it over time. So here's a monthly chart, data going back many, many years, and hits a peak. Okay, everything a little overbought in here. Then a following peak shows some bearish negative divergences, slowing of the momentum. MACD still on a buy, dating all the way back to late last year. That's still quite easy to see. But you can see right here, the down-sloping lower highs in the indicators. Okay, showing a little bit of slowing of the momentum. And it's hitting resistance right here as well. Hitting resistance right there on the monthly chart. Let's move over to the weekly. And again, just click the chart, move it on, and we'll reset the chart there to a weekly. This data goes back to 2019 now, and perhaps trying to get back to these highs from just a couple of months ago, okay, or, middle of June or so. Now, into this high though, see there were those bearish divergences right there. See, everything had a lower peak. Everything had a lower peak. Okay, notable that on a weekly the MACD is on a sell signal. Everything had a lower peak in there. Okay, now coming into the selling period, on lower rates, higher bond prices, inversely correlated there. But coming into this low over here, okay, see that lower yield, and the shorter term indicators just hit lows. They get oversold. The RSI 14 simply goes to neutral territory and then rebounds from there. Okay, now it's up to the yield market to see if it can set some kind of a new high over here. Doesn't look like it's going to be in a hurry to do so. There's a lot of conversation about yields, currencies, commodities this week, primarily driven by, very short term. There's supposed to be extra attacks going on from Russia into Ukraine because the Ukrainian Independence Day is tomorrow. Well, it'll be tonight our time in the eastern part of the United States. The rest of the world, it'll be Wednesday. And that's driving some of the fear in the oil prices, driving up some of the interest rates. People getting a little bit afraid out there temporarily. Going out a little bit further, there is the Jerome Powell, chairman of the U.S. Federal Reserve speech at Jackson Hole, Wyoming. That's this coming Friday. A lot of nervous people about that one as well, because we all remember last year he opened mouth and inserted foot when it came to his, oh yes, inflation is transitory. So we know that did not hold water. But again, you see how the pressure came in because of this negative divergence, bearish divergence right there. Now it's simply rebounding from short-term oversold on the weekly and intermediate term coming into neutral level. Going into the daily, okay, we hit that, and we'll come back to it, reset the chart. The daily, not quite as strong as the 2-year. You see the chart got a little sloppier, but there does seem to be a mini uptrend in place since the beginning of August. Okay, kind of a little bit of higher high, higher low going on. Maybe trying to break out above this area right about here. It does still remain to be seen, and I don't know if it has it in it. I don't know if it has it in it. Again, over here, simply got oversold on all indicators and then rebounded from there. All right, on to the main event, the agricultural commodities. One of these drew my attention today, and I wanted to wait for the market to open to show you this stuff. Here is corn. A couple of weeks ago, we had a nice, intelligent conversation about corn and the agricultural commodities over in our Discord channel. And if you're not in our Discord channel, I'd highly recommend you jump in there. Let me know, send me an email if you need a link for that. But you see, this is an ascending triangle. You have a series of higher lows hitting into a resistance area and then breaking above it, also breaking above the 50-day moving average as it's been going higher. You see volumes kind of coming in here. A couple of selling periods recently where volume didn't show up. So volume-wise, it's playing a bullish role. Price-wise, playing a bullish role. And with the breakout, accompanied by short-term overbought conditions, that is not to be interpreted as a bearish sign. That is to be interpreted as a bullish sign. And the intermediate-term indicator is not overbought. If this was already up into the low 70s while this was happening, that would be different. However, not to be interpreted as a bearish sign, again, especially considering the pattern itself and accompanied by rising volume on breakout periods. So this is corn. This is one of the main agricultural staple inputs of food diets around the world. That is certainly inflationary. We'll check out soybeans here. Okay, soybeans, not quite as pretty as corn, but still similar look to it. Breaking above resistance over here. Okay. Wheat, just rebounding a little bit. Not as strong as the others, but looking at DBA, which is a combination of a lot of these, still has some work to do. So corn is the main critter over here. Okay. Breaking out from this ascending triangle here today. You could tell already volume will be hot, will be high, accompanying the breakout as early as it is for the day. Okay, so corn and the commodity basket, the agricultural commodity baskets, they are moving higher. They are breaking to the upside, and that is going to be a little bit of a thorn in Powell's side. That's not what they're looking for right now. They need to see backward movements on agricultural commodity prices, not upward movements. Okay. That's a lot of work. Again, I told you we were going to get into the weeds here a little bit. I'm glad you could join me. Let's talk again soon. That's all for now.